And welcome to the TriggerCharts pre-market rundown for Friday, December 2nd, 2022. Thank you so much for joining me. A pretty big group this morning. I think everybody's questioning what is going on because we've seen some pretty astounding, maybe against the grain move in the market. So that's something we're going to have to go through. This is a discussion for education. I want to make you take a look at, for a moment, our disclosures. And those disclosures say investing involves substantial risk. Past performance is not a guarantee of future results, and a loss of original capital or your principal can occur. So make sure that you understand that, of course, everything we're talking about here is for educational purposes only. Very important, because with that in mind, we're going to talk about things that I have on my plan and a few things that we want to get from you as well. So if you have any particular stock symbols or future symbols or currency, or I don't care, whatever it is, we will go through it. Let's start off with where we are today, because we have seen a pretty dramatic turn down just moments ago in the futures markets. The Dow Jones Industrial Average mini futures right here on the top left, down about 400 points or so. This is going to be actually a little bit worse, because the fair value actually, fair value is better for the Dow Jones. Fair value will be worse for the NASDAQ and the ES, which are right next to it right here. So what we're looking at right now is some pretty substantial losses, and that is due to the very good, or at least the better than expected unemployment number that came out today. And one of the things you need to keep an eye on, and this is something that sometimes people who are not actively trading, or maybe even actively trading, but very focused on a position, let's say, seem to sometimes forget. And it's very simple, and it's very important. And that is, there are things that are going outside, outside that you need to pay attention to. So let me try to give it to you in this manner, and something to think about. I think it's a really important lesson. When you're driving down the road, if you're just looking through the front windshield constantly, that's all you're looking at. And in particular, maybe you're focusing only on the lane in front of you, not to the right, to the left. And then you start thinking, well, you know what? Everything is just fine. I am just cruising along and there's a problem. The problem is there are cars to the left. There are cars and obstacles to the right. There's things behind you that may be coming up. There's all things above you, below you, potholes, things like that. These are areas you need to pay attention to. And when we have a day like today, and everybody says, oh, damn it, God, I shouldn't have kept that trade on overnight. Or, oh, I should have known better. Maybe I should have hedged my position, taken a piece off it ahead of this, because today was a very important day. Today was a day that the unemployment numbers came out, and they were better than expected by a bit. The unemployment rate was holding steady at 3.7%. And on top of it, wage growth was there. Now, this is on the heels of some pretty optimistic, I would say not optimistic discussion from Powell, but an optimistic take on what Powell said the other day. And what I mean by that is that when we saw that Powell in his last discussion talked about how maybe, we could start slowing down next meeting. He really wasn't absolute about it. And then you start getting these kinds of numbers that come out that do not confirm the excitement that happened, which was really a short covering rally, people offside again. And then what we have today is a retracement of that. But point is, the lesson I'm trying to bring up here is you need to pay attention to a lot of things that are happening in the market all around us, not only in the US, not only economics, not only the stocks that you hold, but also outside of that. What happens to their neighbor if all of a sudden a stock is cut down because of a bad earnings call, and all of a sudden you're caught up in that maelstrom? So in other words, maybe you should be paying attention to the competitors, the industry, the sectors, a lot of things to look at. Listen, we all know that it's all about directionality, price, support, resistance, all of that. There's no question about that. But we also have to look at where the overriding trend is on things, and things that may impact where we are. So just keep that all in mind. Let's close this down a little bit. All right, what's the theme for this week? Hopefully, by the way, you had a great Thanksgiving last week. The theme for this week, I think, is running for the barn. If you ever went horseback riding as a kid, you know that once you go around the area, the trail, and you go out, and then you start coming back. Once you get about 3/4 of the way back, the horses get quite a giddy up in their step. And what's going on? Well, they're coming back, and they know that you're going to get the hell off their back, and they're going to be allowed to just hang out in the barn, eat some hay, sleep if they want, do what they want. They're getting excited. Well, here we are at the end of the year. We're in December. The idea of a Santa Claus rally, the idea that things are oversold, get rid of all the things that are going badly into 2022. Finally, getting a reprieve rally. Let's just get it over with and just move into 2023, where once again we can start with an extreme level of overall, either bullishness or maybe even a sense of this opportunity. Why? Well, here's this reason, that reason, this reason. So right now the bulls are running for the barn. The horses are running for the gate. And also seeing the glass is half full, as we talked about what happened with Fed Chairman Powell the other day, where he came out and talked about that they could be doing this, but it was really just an open question and people got all crazy about it. The big thing that I wrote about before we started was that bad news could be good news. And the whole point of that is that when you look at the bad news as good news, if we did see a really rough employment number, because really the mandate of the Fed is manyfold, but really they focus in on employment and price stability being the code word for inflation and wages to a degree. And employment, of course, we know is employment. So the point that we're seeing right now, what we really have to focus in on is that now what we have is the opposite of this, which is good news could be bad news. And that's what we have going on today as the market is still continually moving lower. Gold is moving down, dollars moving up, yields are moving up as well after they hit a pretty substantial reduction, down 75 basis points from their couple of months ago high. We saw the 10-year at about 3.5. Now we still have a very significantly inverted yield curve from all the way up, all the way up to the 10. It's significant, but also if you remember something, some time ago, when asked about the 2 and 10, the inversion of the real yield curve, where the 2-year yield is higher than the 10-year yield. And what does that mean? The Fed said, oh, well, you know what? We don't really look at that. We look at the 3-month. I'm thinking, wow, they look at the 3-month to the 10-month? To get that inversion, that would really be ugly. And I think they were doing that without the foresight that it can really get as bad as it is. We have some pretty significant inversions. And you could say that, well, it doesn't always predict this or that, but I got to tell you something. The amount of inversion that we have, the crazy amount of differential between, or distance between the, let's call it the 6-month and the 10-year. It's like 1%. The 3-month and the 10-year, the 1 year and the 10-year, 2-year and 10-year, 3-year and 10-year, 4, you keep going. That is all very bad for an economy. The inverted yield curve, if you just think about why that is and how that plays out, it does not work well for an economy. That's the bottom line. I want to mention before we go any further, and I really want to press this very hard. There's a few things that are going to be coming out in, there's a class that we're going to be, I think, announcing next Tuesday. No, next Tuesday. Yeah, the 6th, right? There's a class that we're going to be announcing, a really cool coaching class webinar. I think we're going to be announcing it next Tuesday, but it'll be happening in the month of December for a month, actually. So if you want to learn a lot from Steve, that's going to be a lot coming up there. But really this new, this relationship, I can't call it new because it's only a few months old that we've been doing this, but this relationship is great. And a lot of you have said, hey, at the beginning, well, it's not exactly the same, but yeah, we did get a lot more. And really what you were saying was, and what we found out was, just some of the things had to take a little time to get used to. But once you got used to them, we're getting a lot of very interesting commentary back that, wow, these TSL, the compression levels, the PCLs on that, and the price ratios, as well as the boxes are really clear right now. Also, all really good stuff. So what's happening right now is that we're seeing a very significant amount of people, saying that, what, this is great. So why I'm telling you this is because I know that there's still probably people out there, they're like, hey, what do I do? All you have to do is very simply go over to TriggerCharts, click on any link over on TriggerCharts, right? That's going to take you over to the place to install, whether it's on TradeStation, whether it's on eSignal, whether it's on TradingView. You'll be able to do all that right there, plus get all the things that are on this list. And the price is less than what we had before by $2, but still, it's okay. Get you the $2 chuck, right? What's the wine over at Trader Joe's? It saves you that every month. All right, what else do we got here? Somebody's asking about the KRI. KRI, last I looked, was, I think yesterday, was at 0, right in the middle. Market's in equilibrium, which makes kind of sense. We're seeing this back and forth every single day. What happens is it starts to clean out a lot of the excess on either side. So that's what's happened recently. All right, earnings season, better than feared. I guess that's the thing. We're pretty much done with earnings season at this point. A couple of little guys straggling in and out. Overall, listen, it was a low bar overall. And when we had that low bar, what happened was that a lot of companies were able to vault over it pretty easily. So I think there's a lot of discussion about, okay, yeah, things slowed down and clearly we had year-over-year reduction in overall earnings. We'll wait till next quarter. I think it's like, let's see what happens next quarter. And if you did, in fact, do well, we saw some companies do very well, especially in the retail area. We saw a tale of many retail situations, but in retail, some companies did very well after they just got obliterated. Some companies, not so well. Costco yesterday, interestingly enough, hit by the higher costs and got kerplunked. So that's a big issue. The other issue that's on a lot of people's minds right now is clearly real estate, right? The reality of what is going on with real estate. And I got to tell you, I've talked about this on DH Unplugged this week and a couple other things. Bottom line is that when we look at real estate right now, it's, in my opinion, a very simple calculation. And when you look to invest in it, whether it's on publicly traded markets in real estate or companies that companies that are related, so either REITs or companies related to maybe real estate like Compass, which stock looks like just a nightmare. Or anything in that genre, or if you look at what is going on with the housing market itself, here's the deal. Very simple calculation. So this weekend, when you're talking to people and somebody says, hey, what do you think about the real estate market? Here's the deal. This is what you say. Very easy calculation. If you think about it, really, it's just a relationship of the cost of money to the fact of what is available to be spent. So here we had before a $500,000 house, which may have been, let's say, I'm just picking a number out of my head, $300,000 mortgage, you put $200,000 down, and it was X dollars to buy that on a monthly basis for the cost of the mortgage. Well, right now, that same $300,000 mortgage is about 3% higher. For every $100,000, that's $3,000. Now we got 3,000 of those, 3 of those 100,000 extra. That's 9,000. That's about $800 per month for the same exact house at the same exact price. What does that mean? Well, that means that the house is going to come down in value because no longer can you afford that house at 500, but you could afford it, I'm just making up these numbers, at 425 or at 400. Pricing has to come down. It's a simple calculation of money. How much is money cost and how much can I spend? That will determine long-term the value of a house. You wonder why houses were stacked up to buy and you have these crazy lines outside of an open house, and why people were overbidding? Because money was essentially cheap and free. When that's not the case, things are going to change, and that's what's happening. What we're seeing right now is that time on the market for most houses are extending and spending a lot more time on the market before people will buy them, if they do. The NAHB sentiment, the National Association of Home Builders, the big guys that are building new homes, is in the toilet. It's absolutely awful. It's terrible. They know what's going on. They see the cancellation rates. They see the fact that people won't pay up. They see the fact that they're being squeezed by higher costs and the profitability is down. They have an advanced view. So if their overall sentiment is really subdued, we'll say, okay, fact is something's wrong, and that trickles down, because what's going to happen is people are not buying homes as fast, right? New homes. What does that mean? Think about all the different industries, people that are impacted by that situation on its own, and you could map it out. I'll start it out for you, okay? When new homes are not being sold, therefore construction workers are not being hired. Construction workers not being hired, and they're being fired. Construction workers being fired, that means that there's going to be people that are going on unemployment or have less money to spend on items, especially discretionary items. Oh, you don't spend on discretionary items, this store and that store is going to be hurting. You can go through this entirety of this process yourself and think about how just this one industry that no longer needs as much lumber, concrete, copper, plumbing is going to trickle down into the rest of the economy. And why, by the way, if you didn't think about this in the past, why this industry is so important to the economy in total. Okay. In October, we talked about something. We talked about how Hong Kong stocks were at a multi-decade low. That was October. So huge drops in Alibaba and Tencent and Bilibili and Pinduoduo and all these stocks, right? Just huge losses. And I said, keep a look at those. And I talked about this 2 weeks ago at our last discussion. I said, you need to watch these things. Best month in a long time recently on these names. I mean, just incredible numbers. Now I can show you this. Let's kind of go over to here. Let's go over to, as an example, KWeb, which is something I told you to watch, right? I told you to watch this many times. Make sure I'm on the right charts. I got 30-minute, okay, daily. We can look at this any way we want. I'm just gonna, again, I think it's really important. We can put on this, okay, the market map, and we got on here the boxes, which are the key components of what you want to look at all times. And again, yours may look a little different depending on the platform you're on, or it may look at, this exactly the same, depending on what, it also depends on what, if you use the default settings or you change your settings. I'm using default settings. That's what I always use. I help create this, and that's the settings I want. So what we have right now is still up overnight in the pre-market KWeb. I mean, pretty impressive move, right? From down at, let's not go down to the bottom. Let's go to right here. 1880, 28, $10 in about a month. It's pretty incredible if you think about it. So the KWeb did really well. The Asher, not as well, but pretty good, 10% up. This is the CSI 300. But tech stocks, you look at like an Alibaba, went from $60 to 85. You look at Pinduoduo, you look at that, for example. Look at that, it's 45 to 83 in a month. Now that's something. So these really rocketed. Now they're just as vulnerable to moving lower, by the way. So I want to show you this, and I want to take off this. I want to go right here. I just want to utilize our various tools that we always talk about. There is a range. There was a range right above, right about here. So let's draw this right in, right there. Okay, that range, and it's extended beyond that, by the way, but that range was an opening right there. You had a triple top, which is okay, interesting, or you could even, if you want to include this one right here, you could say that was a quadruple top, okay. But what you had was here is this range right inside of here. There really was not much going on. When you look, right, we always look left. That's what I teach you all the time. There's a giant hole right here. That hole was easily just, boom, catapulted right up. There was nobody that had any volume in here. Nobody was playing this. Nobody was really buying in there after this ratchet down. And then we just saw the continuation of this move down. Then we saw, I'm going to draw some more mess on this chart, but this big consolidation range, too big to really think of anything other than the fact that when you have this area, this consolidation range, that it would be, it would have to resolve eventually. But then we have 1, 2, and this one a little bit, this one here, 2 and 3 tops, and then boom, up. And again, why is that? Well, we got above resistance. That was very clear. We had an area of non-existent volume, of nobody trading in there due to the fact of this major just quick drop right there. And then what you have entirely is now, this short squeeze that happened off of the bottom, off of multi-year lows, by the way. And multi-year, if you go back, you can see this. But we saw a bottom here, bottom here, bottom here, and then this, not as much, a little bit above. Oops, not very straight. There you go. A little bit above. But this is important. Now, when we get a little bit further, that's when the question comes in, right? What is this going to look like when we go further? So this is daily. Yeah. So let me, there we go. Okay. 1 second. There we go. Do we get above this area? You still have a lot of consolidation to get through. This is the October of 2021. Now, one of the things that's really interesting, I always say this, and this is, I think, playing out pretty appropriately right now. And that is that oftentimes China stocks or in advance. I don't know why they drop and they pick up before ours by a few months. Now, I think we're right in line with this that we saw right here, but this drop, it was really in April of or March of 2021, they hit their peak, where we hit our peak in like October. So if you use this chart right now, we're kind of over here. This one, we have another potential drop with a big drawdown, I mean, theoretically, and then a move up. If in fact, we see that, now this is just one stock, this isn't the whole index, but generally speaking, what I'm saying is I find it very interesting. I've seen really interesting correlations with that in the past. A couple other issues here. Best market, no, sorry. Bear market bounce, or does it, does it matter? Do we have to discuss this? Does it matter if it's a bear market bounce or if it's a new leg up, or if this is going to peak out? Right now, we're trading at 288, just below the support on a daily basis. On this, I mean, the likelihood to come back down at 284, not a big deal, another 4% from where we were yesterday, but really test these levels. Let's move these around a little bit. Right about there at 278, very highly likely, in my opinion. No reason not to just roll over. There's not a lot holding things up right here. So we're going to look at Shop and Ulta. I may go back and forth on this. Let's look at Shop first, and I got a bunch of symbols. I'm going to say, put your symbols here. You see that little chat box that just showed up? There's a little chat box, and I put the word here in there. I mentioned go to TriggerCharts.com. Let's see if I do this. I want you all to bookmark this. Well, just go, there you go. You can click that. That goes to TriggerCharts.com, where you can go and just find out more, but also make sure to get yourself on the platform, because you know what? You can actually install this and utilize these indicators, the 7 indicators we talked about, on any platform, and but not concurrently. So you may want to use it on TradingView. That's great. You may want to switch over to TradeStation. That's great. You may want to move over to NinjaTrader. That's great. But one at a time. If you have any other stocks, put it in there. We have, yeah, I put that out there. Okay. So one of the things I'm looking at is Shopify. Again, just an awful, god-awful, just a terrible looking chart. Just a terrible looking chart. Great company for what they do. Were they worth what they do? I guess not, but very interesting. If we have online shopping and we have more stores picking up, Shopify is going to be the play. Where are we at there? Right there. We hit that resistance zone right here. A little bit of a nub. Interesting. I still think when I look at this, if we can get above this, let me go here. Okay, if you see this resistance point that we just got above right here, that's a really important line, okay? Above the red is above resistance, which means 2 things. 1, don't be short. Number 2, consider getting long, right? That's the long bias right there. I still think this number here, so right at the peak where we were yesterday at about 43 and change, is an important number. You get above that, you got this peak you're going to clear, and then really I don't see much here. You really could see this move back up to the $60 range. And that's still a far cry from where it was back up to the 150s or so. So that's something to look at. Somebody's asking me FXI, which is the Hong Kong stocks. That's what I was talking about earlier. I was segmenting primarily the stocks in the technology area in China and Hong Kong. But here's the FXI, which is the iShares China Large Cap ETF. Don't be mistaken, though. These are Hong Kong stocks. So it's the Hong Kong Hang Seng market, not necessarily the broad-based China market. It's just an important distinction that's not really laid out and labeled very clearly in the name. But where are we with this? So on a daily, okay, we can look at that. If we want to look at weekly, trend is clearly down, broke that, just the same thing that we looked at before, that big move from the bottom off those multi-year lows. Right now, stop right at resistance right there. Above here, there is a break. Listen, if you can get above this level right here, what do you see? Well, I take my box tool and I just say, there's just nothing here. I'm going to look at that to be confirmed. I'm going to put my radar to get a more granular look. And, I do see actually there is something at about 29. That's a nub that I'm going to worry about. On this level and going to the left here, looking left, not much going on. However, this would be my hard number right there. I'm going to bring this now. I'm going to draw this up to there. And I'm going to say, move it. Yep, there. Then I'm going to say, okay, I know this level on the bottom is important, but also when I look at this, really that's the zone. That's the zone that I would really look to see if we can get some momentum going. And if we can, I would hold it to 32, and that would be great from about 27 where we are right now. However, we still have to get to this point because right there, is going to be some resistance above 28 and change. So what you do is you put an alert and you say, listen, if we get about 29.30, I'm going to start looking at this as something very interesting, because right now it looks like it could possibly move up to there and stop dead and then reverse down. That's potentially, again, this is on a weekly basis. Look at this on a daily basis. Okay, that's the box we just drew in there from before. Yep. On a daily basis, let's look at this here. On a daily basis, it's very choppy. Still, you got above 28.53 or so. It's going to be into some area, probably back where we have the yellow lines, where our high volume nodes inside of the market profile, right? The market map right here. And what we have is about 28.83. Above that, still a lot of congestion. You got a lot to get through. This V was very good, probably just to take back all that happened. Now go back down to trend. We're still probably in a short-term uptrend that only happened a few days ago, long-term downtrend on this. So it's just ugly. I mean, just ugly. But long-term, you know, if you have an affinity towards China stocks and you think that they're going to do well, particularly those in Hong Kong, not going to have any problems with a few things, I think that's a good idea. I like the general concept. TLT probably down today. Yeah, down a little bit today, but boy, that skyrocketed up 105 from about 95. That again, that move from what we saw in mid part of this year, right here at about August, when everybody's like at peak inflation. Look at these moves, right? The last couple of days. 101 to 105. This is what? This is 30-minute. Yeah. So 30-minute. So this is in December, went from 100 to 105. It's about 2% move. Yields came down to 3.5 on the 10-year the other day. This is moving up. Is it moving up a little bit more than it should have? I don't know. It looks like right now, you know, you may peak out on TLT. Again, this is the bond, the treasury bond. So the price, people were buying bonds, shoving down price, yields, shoving down yields, bringing price up, yields coming down. With that, you have to wonder, is that going to hold? XLU is one of the good plays recently, has been utilities, but very, very, very choppy action. It's all about yield. This is a mirror of your yield. TSM, interesting. You know, this is a Taiwan semiconductor. Semiconductors are having big problems. They're going to be open up a 4-nanometer fab. I don't know where it is, somewhere in the US. And it's a big issue because Apple wants to work with them. Great company overall. Taiwan's an issue because of Taiwan. Issue with semiconductors because it's a glut. But these guys are the top of the game. You want to do something in the world in terms of technology, you're probably going to be talking to these guys right there. PBR, interesting. PBR is Petrobras, and that's the partially state-owned, or I don't know if it's fully at this point, state-owned oil company for Brazil. It's going to track the Brazilian market. It's going to track the price of oil. You know, it's, again, this chart is just horrendous looking. I don't really trust it. I mean, it's an interesting company. I like the company. I mean, you know, we've invested in it. But, you know, right now it's on the way up. It's all about oil, though. That's the big issue right there, right? It's all about oil. What else did I want to talk to you about? Ulta. Ulta had a good report last night. Makeup company hitting all-time highs yesterday at 472. Broke above every possible thing. I guess no matter what, we're going to need makeup in the world. It's just the fact of what's going on. Coin, some questions about that. Where is that going? Down to the 2.8%, down to $1.27 in the pre-market. Getting some good basing action actually here. You see what happens like right here? See this area right here, this basing action, right? Let me do a little drawing here. This little basing action, but can't get below, right? See that right there? I'm getting that right here. Now that may go on a little bit while longer, but usually what happens there is there's going to be a break right after that. In this case, it was up. Sometimes you get some, you know, basing action, then what happens? It falls. So keep a watch on this very carefully in terms of what's going to happen on that. Okay, in terms of the reality of basing, when it breaks. So here's some basing. Tried to break out. Nope, it broke down. Especially when you get these long levels. I mean, it couldn't get below this level of 60 for a while, right? And then when it did, it was significant on the downside. Hey, thanks everybody for joining me again this week. Make sure to go over TriggerCharts.com. I'll see you again next week.